large cap IT, with HCL Tech also maintaining the guidance per se.
Yeah.
So I think it'll be interesting to see what the commentary from Infosys is. So we'll watch out for this as well in the session today.
I think we'll hang on a bit till we get our teams up and more commentary up. But that revenue number is definitely looking interesting, and let's see if we can get it up on the charts as well. Revenue at 39,315 crores, well above estimates. We'll wait and see. Of course, the details coming in terms of constant currency and margins, etc. The commentary becomes key now. Broadly speaking,
the EBIT, sorry, just one thing, the EBIT number is up on the screen and the margins up on the screen as well. So 8288 crores, if I'm not wrong, is the EBIT versus estimates of 300 crore lower. And as a result of which, I think the margins, despite the higher revenue, have beaten what was estimated by nearly 40 or 50 basis points. It's not turned out to be a bad quarter for Infosys at all relative to estimates.
I would say just look at the fact that even a slightly better than estimate result is seeing a resounding response from the markets.
Very likely tomorrow.
It's. I think we could stick our neck out and say that this is going to see quite a warm welcome from the markets tomorrow. I mean, we'll of course overnight see what the ADR is looking like as well when it comes to Infosys. But a good set of numbers. Net profit number also out. 6374 is what I could quickly see. Net profit at 6374 crores versus the Bloomberg estimate of 6253 crores. So it's a beat on all fronts. The first cut of Infosys is a beat on pretty much all fronts when it comes to Infi, EBIT margin at 21.1% versus the estimate of 20.7%. We'll of course wait for the management commentary and the details of the numbers as they come in. All right, we've got one more figure coming in. FY25 constant currency revenue growth is at 3 to 4%, operating margin at 22%. I reckon this is going to be something that the street will welcome, because all management is talking about, I mean, they're caveating it, saying, okay, FY25 is the year when you might see the green shoots, etc. They're being cautious in how optimistic they get with their commentary as well, Neeraj. But the fact is that you're beginning to see that turnaround, perhaps.
Yes, we very likely are. I was trying to open the sheet, Tamanna, to just try and see how is it that they have done quarter on quarter, not just relative to estimates, but even otherwise. So, and segment wise. So, financial services, Tamanna, has actually done well. So revenues by financial services, they have done well. So it's important to note that BFSI seems to have done okay or better for Infosys QOQ versus March. So that is the first thing that stood out for me. The other aspect seems to be that on all others, high tech, they've lost out a bit. Life sciences is steady. Others, they've done okay. Retail has also lost out a bit. So it's essentially BFSI, which is the fear point, which has actually done well for Infosys is June versus March. So QOQ, that is one thing to watch out for. NA has come off a little bit, Tamanna. 59.6 was the contribution by revenue by client geography. March was 59.6, the statistic, and now it's a downtick a little bit. So in constant currency terms, down to about 1.2%, which is North America, but Europe has fired like a charm, 9% growth.
Wow.
Quarter on quarter.
So that's again, to draw a parallel, not exactly apples and oranges, but we saw that in TCS as well, where the North American business suffered. It was in fact in TCS's case, the India business, which was buffering them up. But you're saying in Infosys' case, Europe is the big story for Infosys.
It has done so, and I think Rucha is here, but the large deal TCV is at $4.1 billion as well. Okay, I'm told Rucha has joined us. Yes, Rucha is with us. Rucha, what stood out for you this quarter?
Yes, so guidance has been improved to from 1 to 3% to 3 to 4%, while operating margin has been maintained at 20 to 22%. Now talking about the numbers has been a beat, revenue and EBIT margin a beat. talking about the numbers on a quarter-on-quarter basis, revenue is up around 2.5%, EBIT is up around 5.5%, while margins are up 58 basis points. Margins have actually come out pretty well, 21.1% versus 20.1% in the previous quarter, while the street estimated the margins to be at around 20.7%. So pretty healthy beat on both the fronts, revenue as well as margin. Now talking about the profits was down around 21.5%, while the street expected profits to be down around 20%. So not a major thing over here. Now this is because last time Infosys had a one-time income of interest from income tax refund, but that is not a pretty big deal for the company. What it will, the street will be happy about is the improvement in margin, and this definitely shows that the company might have seen an uptick in the discretionary demand.
Rucha, the point is the guidance.
Yes.
Okay, Tamanna has just come into my frame, which is fine. Tamanna, can you move? Thank you so much. Okay. Now, Rucha, my simple question to you is this guidance that we're talking about. It's a sharp improvement. What do you think of it?
Yes, very, very sharp improvement. So that is what I was mentioning. We'll definitely watch out for management commentary, but I think management is definitely seeing green shoots. This is what is showing in the guidance. So if the management is expecting to have around 4% of revenue growth, this will largely be skewed towards the second half, and definitely clients are very much positive on the IT sector, and this will be confirmed in the call which we have today evening.
Okay. Rucha, anything else? So when I looked at the segmental performance, for example, not in reported terms, but in constant currency terms, the YOY growth has looked okay, but BFSI QOQ, financial services has done remarkably well from 26.4 to 27.3. So there seems to be a bit of a growth in financial services, a bit of a surprise, I would reckon.
Yes, Neeraj, you're right. So BFSI has been weak even for TCS, and when we looked at the LTI Mindtree numbers today on a YOY basis, BFSI was very much flat for the company, but Infosys has done pretty well on the BFSI numbers, and this is the segment where almost all of the IT companies get majority of the revenues from, and deal wins were also very healthy for the company. So in all the front, I think Neeraj company has done very, very well, and guidance is what the street will be very, very happy about.
No, the one number that stands out is this uptick in guidance, Rucha, most certainly. Okay, Rucha, maybe come back in a couple of minutes because I would love for you to be in the conversation with Moshe Khatri. Actually, if you can stay on, just stay on. The other aspect, and we'll get Moshe in a moment from now, we'll probably try and get in some other experts as well. The large deal TCV is at $4.1 billion. EPS, well, YOY is okay, 7% uptick. But when you just look at the constant currency growth, 3.6% QOQ is a really good number. I'll tell you what, viewers, we'll take a quick break. We'll come back from the break, try and get in experts to tell you what exactly do these Infosys numbers, but more importantly, the uptick in guidance may mean for the stock. Stay tuned.
Powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate, investments are robust, more comprehensive GDP.
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back, it will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there is good sugar does bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
And unmissable.
Hello and welcome to NDTV Profit. This is Rucha Somaya and we are going to talk about Infosys, the IT giant, which has just come out with its first quarter numbers. Numbers pretty much in line. Revenue is up 2.5%. EBIT margin is up 60 basis points, while PAT has reduced by 20% in line with expectations. However, revenue and EBIT were a beat on expectations. But what is important is the guidance. The company has revised its FY25 guidance upwards to 3 to 4% from the previous guided range of 1 to 3% for FY25. However, they've also maintained the operating margin guidance at 20 to 22%. We have with us Mr. Sabad, an independent expert to talk about the Infosys result. What do you think of the results, sir? Welcome to NDTV Profit.
Thank you for having me here. I think the results have been a good beat with a 3.6% quarter-on-quarter constant currency growth and topped it with an upgrade in guidance. So I tend to believe that the results have been a good beat. somewhere the positive growth rate momentum has started to come in for Infosys. And if I recall correctly, the quarter-on-quarter growth number seems to be a multi-quarter high in terms of 3.6% that they have delivered.
Right, sir. But the TCV deal wins, the large deal wins, if we talk about, has come in at about $4.1 billion, which is a tad lower than what we saw in the fourth quarter, around $4.5 billion. So how do you look at the deal wins kind of coming down? And this is what we saw even in TCS, QOQ, YOY, in both terms, the TCV was down. So how do you look at the deal wins coming down?
So I think I've talked before. There are a lot of headwinds that the IT companies are facing right now, particularly when it comes to the US market with the upcoming presidential elections. There, a lot of discretionary spends are probably on hold, and that's getting reflected into the way the deal wins are getting structured. Not only that, the overall employee headcount, if you'll notice, for Infosys has actually come down from March to June, which tells us that probably they are not expecting great amount of deal win traction ahead either, nor a significant ramp up in execution. But the good news at the end of the day is that they have upgraded their guidance, though not materially large. I expect as we go down the year, as we should see better and better deal wins coming in, and therefore further upgrade in terms of the guidance from the management.
As we look at the employee metrics, sir, it has come down on a quarter-on-quarter basis. Around 2,000 people have been net reduced from the company, and attrition has also remained largely stable. So what kind of employee metrics do you expect the company to go ahead? Do you think that the fresher bench have largely been utilized, which was the case with LTI, Mindtree, and now lateral hiring would likely be a pressure on the margins going ahead?
So if you look at the utilization rate that they talked about, it has already seen better from the March to 82%. It is now almost close to 84%. So the utilization rate has sharply improved. And mind you, the year ago number was about 79%. So that's a smart 5% upgrade in terms of utilization rate, which means that they are adequately poised in terms of the current employee strength, and any further improvement in utilization rate is probably not possible. So that could mean that any ramp up that they would expect ahead should come up by going in for more and more recruitment, essentially raising the headcount.
Sure, sir. Thanks for that kind of input, really helpful. And thank you for joining NDTV. But now on our list, we have Mosha Khatri, who joins us now to talk about the Infosys results. Hello, sir. Welcome to NDTV Profit. And what is your take on pretty great set of numbers that Infosys has reported this time?
This is a great follow-up from what we've seen at TCS. We are starting to see the large deal flow that was won about 12 to 18 months ago convert at a better rate. We did hear that this was kind of the trend probably before the quarter when we were in India early June. So I think you have this really interesting dynamics where, for the past 18 months, we've seen this disparity between the fact that the industry's bookings were very strong. On the flip side of it, you've seen, I would say, very, very dismal revenue growth. And now that disparity has been kind of closing. So you have better visibility, and that's why they took their numbers higher. The real question here is whether there's any change in discretionary spending. And we don't know exactly if that's really another driver here. But again, at least you have better visibility because the deal flow is converting better. You have better margins. Obviously, it's a function of utilization rates, but I wonder if it's also a function of the fact that some of the companies are using Gen AI related productivity improvements. And maybe because of that, you're actually seeing a decoupling between headcount growth and revenue growth. And that's been kind of, we've been talking about this theme, for years about this theme actually happening in the industry. So maybe that's another thing that's also adding here. In general, we started this earnings season, I would say, with a lot of investor skepticism about the second half recovery in the space. Some of it obviously is related to the macro. Some of it is related to concerns over a Gen AI related disruption. And clearly at this point, the industry's numbers seem to be addressing positively a lot of these concerns. So at this point, on a relative basis, it seems that we're in better shape compared to what has been perceived before the quarter actually started.
Sure, sir, got that. But we also have Mr. Omkar, who's joining us from Axis Securities. So let's have a look on what he has to say. Hello, sir. Welcome to NDTV Profit. What are your takes on the results this time? Pretty great set of numbers, isn't it?
Yeah, definitely. I mean, we have demonstrated better execution for this quarter after this so much lag in times of delivering the things. One has to see an interesting thing about and hearing from the management that how the engagement, our client engagement has been ramping up, how the deals are ramping up. That they have won in the previous quarters, and one has to see what is their outlook and the client commentary from the engagement, especially from the BFSI, high-tech and telecom verticals, which were considered to be the laggard as compared to the other verticals. Definitely the deal wins have came very, very strong at 4.1 billion as compared to others, but one has to see that, on the demands perspective, the companies are not hiring aggressively as they were hiring during COVID times. So I'm not very sure about the turning of the demand scenario completely, but there are definitely some green shoots which are helping them to report a stronger growth numbers. But for now, definitely on a prima facie, the numbers looks strong, and a company might get a revision in the valuation part. Yes, definitely.
Right, sir. But coming straight to the point to you, Mr. Mosha, what do you think of the stock right now? Good time to enter into names like Infosys and TCS?
Well, I think in general, when you're seeing this uptick or inflection point in revenue growth or earnings growth for companies, the momentum really shifts in general for the industry. And again, I think what we have seen here, we've definitely seen a rally in these names. We've seen multiple expansion, but remember, the multiple is expanding on better numbers. So I think that's the offset on the other side. But it's not only a function of pure buying, it's also a function of investors covering short. So it's probably both. These are both dynamics that are driving the rally in sector stocks, if you will.
Right, sir. So same question to you, Mr. Omkar. Do you think names like Infosys and TCS deserve a good entry point at the current levels?
Currently, I believe it's more of, they are already being overvalued, 30% odd with the Nifty. I believe one has to look at, how the management saying and, how the things get ramp up. So it's better to wait and watch. The markets have been already up, and one has to definitely see. And, if the investor is a long-term investor, then he might, hold on the stock. But I really believe that, the one has to listen what the management is saying. If there is an increased engagement, increase in the sentiments, and there is an discretionary spend is happening during the, in the industry, then there might be an uptick in the demand scenario, and there will be a concrete growth and sustainable growth over the period of time.
Sure, sir. Got that, sir. Very interesting inputs from Mr. Omkar and also Mr. Khatri. Thank you for joining NDTV Profit, and that is what we had on Infosys. Time for a short break, but do stay tuned to NDTV Profit. Lots more on the other side.
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
Market ends a choppy session at record highs as the Sensex and the Nifty settled a fresh high for 4 consecutive sessions. Nifty IT ends over 2% higher after scaling new highs, adds more than over 81,000 crore rupees in investor wealth. Infosys Q1 Results net profit beats estimates. Revenue guidance for fiscal 2025 is at 3 to 4%, while operating margin is expected to grow at 20 to 25%. The Karnataka government withholds the bill reserving jobs for locals. The bill mandated all private companies in the state to reserve 70% of non-management roles and 50% of management-level jobs for locals. Royal Enfield's Guerrilla 450 throws an open challenge to Bajaj Triumph 400, but will it work? A detailed comparison on the show. Police detains IS officer Pooja Khedkar's mother Manorama Khedkar for allegedly threatening some people by brandishing a gun over a land dispute. Books Khedkar Kabul and 5 others. evening and welcome. You're watching Profit 360 and I'm Nupur Talwar Suri. As always, over the next half hour, we bring you all the latest from the markets as well as national and other news. Well, we begin at the moment with how the markets have performed, and Agam Vakil is joining us for a quick look at how the markets performed today. Hi Agam. Markets, of course, ending a choppy session at record highs.
Yes, absolutely. So, well, I would actually want to divide the market into two segments. The first, the large caps, and that is essentially the Nifty 50, which did in fact close at a life high. It made another life milestone of around 24,800, and it also closed with significant gains. But while we did see that strength in the Nifty, and while we also saw it close at life highs, the broader markets, the relatively smaller names, didn't really have a great day. In fact, out of 10 names, you actually had declines for 7 and advances just for 3. Overall, the reason behind the strength in the Nifty 50 today, well, there were two reasons actually. The first one, of course, was it was essentially the Nifty IT companies which actually did advance. A lot of the gains on account of Infosys and TCS among the heavier weighted companies. You also had gains in LTI Mindtree. But if you leave that pocket aside, the other reason behind the gains in the Nifty today was essentially a lot of short covering. So if you take a look at levels around 24,600, 24,700, 24,800, a lot of these traders had in fact gone ahead and sold those particular options. And because of the fact that they were forced to cover those options and buy into the markets, that's also another reason why we saw the Nifty move to new life highs. That said, when it comes to the broader markets, the market breadth remains weak, and at the moment it's going to be a wait and watch. And well, we have to remember that markets will continue to be volatile, they will continue to be choppy in the run-up to the upcoming union budget this upcoming Tuesday. That said, overall it was a good day for the Nifty, but as far as the broader markets are concerned, a lot more challenging.
All right, Agam, thank you very much for joining us and breaking that down. Moving on, Bajaj Auto had reported double-digit growth in revenue and profits. The company's margin too grew by over 20%. Now, the company is also betting big on its new CNG bike, Freedom 125. Listen into what Bajaj Auto's Rakesh Sharma had to say about the first quarter earnings.
We think that there is an underlying growth of about 6 to 8% in the industry, and much more driven by the top half, which is the 125cc plus segment, which is growing at double-digit rate. So those underlying trends seem to be intact as we step into quarter two, which is obviously, July and August are going to be low months, and then August a little bit of festive starts, but really the big quarter is going to be October, November, December. So, but the underlying trends definitely seem positive.
Now, Asian Paints posted the second consecutive quarter of poor earnings. The company also warned that they would have to go in for a second round of price hikes after they raised prices by 1% recently. MD and CEO of Asian Paints, Amit Singhal, though said that there were green shoots in the horizon in terms of improving rural demand.
So overall, when we look at the quarter in terms of the way it has gone, it has been tough. The market conditions have been definitely on a slower side to that extent. They got impacted by overall the elections in terms of what they were going, and also the heat waves in terms of what we could see in the market. However, I think the month of June has been much better in terms of what we have seen, both from the point of view of the uptick in the rural demand in terms of what we have seen, as well as from the point of view of B2B sales and industrial sales.
Now, the IT sector continues to show strong evidence of a possible demand bounce back. LTI Mindtree met street estimates in its first quarter numbers, and the company's management is very positive that demand will go up in the coming quarters. Here's whole-time director and COO Nachiket Deshpande weighing in.
We saw that the demand in our key industry verticals, which is BFS, tech and manufacturing, actually started to show some green shoots. And we are seeing a good momentum in the demand in Q1, and we continue to see that momentum continue in Q2 at least for now. and that's resulted into the services growth that we had in this quarter. We are also seeing that all the deals that we had closed in the past few quarters, they've now fully ramped up and also hence shown the conversion of that in our revenue in Q1 as well.
Now, after facing heavy backlash, the Karnataka government has paused the controversial employment quota bill. Earlier, Chief Minister Siddaramaiah announced a cabinet decision for a 50% quota in admin roles and 75% in non-admin roles. The announcement invited sharp criticism from industry leaders. As the pressure mounted on the government, they came with a fresh update that it's still in the preparation stage. Let's hear Priyank Kharge's response on this.
Well, see, it is the quota bill that was drafted by the Labour Department. They have to have interministerial consultations, industry body consultations. That has not happened from the Labour Department. So we'll have a wider consultation. We will ensure that we provide the best skill sets for our local people to ensure that they are employed better, not only here but across the globe.
Was the Congress government in a panic mode? Within 24 hours, it changes its stand, reverses it?
No, see, it's a draft bill. It was not a bill that has come to the House and passed. The rules have been framed. Nothing of that sort has happened. It is the Labour Department's intention. That there's nothing wrong with intending that more locals get jobs. Andhra Pradesh has passed similar bills. Haryana has passed similar bills. Jharkhand has passed. Even Maharashtra had done something similar. All have not stood the test of law. And it's just matter. We will figure out everything. We'll take the industry bodies into confidence and we'll see what needs to be done. Whatever gaps are there, we will ensure it is filled.
All right, Manish Sabharwal, Vice Chairman of Team Lease Services, spoke if there's a need for jobs reservation in the private sector. Listen to what he said.
This idea of reservations is complex, even politically, because while it does create constituencies and remove some injustices, you can't discriminate in favor of somebody without discriminating against somebody else. So I do think that, back to my Diet Coke, there are no tastes without the calories. If we really want to address the concerns of kids, I mean, maybe in 6 months or 1 year, you can get some political brownie points for some reservations. And this has traditionally been in government, but the government no longer has the fiscal space to create jobs.
Well, let's now look at how the industry has reacted to this. Biocon founder Kiran Majumdar-Shaw took to X, stating that such reservations must not affect the state's leading position in technology. Andhra Pradesh's IT Minister Nara Lokesh replied to its industry body NASSCOM's post on social media. He invited IT companies which wanted to exit Bengaluru to set up shop in Vizag in Andhra Pradesh. The CEO of PhonePe, Sameer Nigam, to criticize the Karnataka government. With this post, he wrote about growing up all over the country as his father worked in the Navy. He questioned why his children did not deserve jobs in their home city of Bengaluru, despite their father providing over 25,000 jobs across India. For today's budget jargon, let's break down another financial term that you often hear about in the context of the economy. Budget surplus. Let's take a look.
A budget surplus occurs when a government's income exceeds its expenditure in a given period. In simpler terms, it means that the government has more money coming in than going out. Government revenue comes from various sources such as taxes, exports, and investments. When these sources generate more income than the government's total spending on public services, infrastructure, and other expenses, a surplus is achieved. Let's take an example. In a particular fiscal year, suppose the Indian government collected 20 lakh crore rupees from taxes and other revenue streams. Meanwhile, its total expenditure on public services, infrastructure, and other projects was 18 lakh crore rupees. This results in a budget surplus of 2 lakh crore rupees. A budget surplus can be utilized in various ways. The government might use it to pay off existing debt, save it for future use, or invest in long-term projects that can further boost economic growth. A budget surplus is crucial for several reasons. It indicates economic stability and allows the government to reduce public debt. Additionally, surplus funds can be reinvested into the economy, enhancing public services and infrastructure, which benefits citizens. Bureau Report, NDTV Profit.
Well, on to the top story from the auto sector today. Eicher Motors, under the Royal Enfield brand, has launched yet another motorcycle, the Guerrilla 450. NDTV Profits, Tushar is joining us with details. Tushar, hi. Tell us, what does this new bike offer and how is it different from other bikes? So, all in all, give us an overview and compare it with what's in the market.
Thank you, Nupur. So, this is yet another salvo by Royal Enfield in the 400cc market, where it is actually not present or just has one product in the Himalayan 450, which is priced in excess of 3 lakh rupees. So essentially the Guerrilla 450, it's a roadster, it's a road-going city commuter motorcycle at about 40 bhp of power and priced at 2.39 to 2.52 lakh rupees. So essentially that puts it right in between the Classic 350, which starts at less than 2 lakh rupees, and the Himalayan 450, which is above 3 lakh rupees. So it fills that sweet spot. But what it has to contend with is the competition that comes from in the form of the Triumph Speed 400 as well as the Harley-Davidson X440. So those two motorcycles also share the same pedigree as what Royal Enfield stands for, that is old school motorcycling. Also remember, the Guerrilla 450 is the first stab, so to say, by Royal Enfield into the roadster space. All its motorcycles so far were modern retro motorcycles, essentially classic motorcycles so far. So what does this mean for Royal Enfield? First of all, this is not, Royal Enfield's USP is the nostalgia. Guerrilla is far from it. It's a thoroughly modern motorcycle. It plugs the price gap between Classic 50 and Himalayan 450. Essentially, if somebody wants to upgrade from a Classic 50, they now have an option within the Royal Enfield stable. Now, Royal Enfield, so to speak, is trying to do a triumph by expanding its offerings or diversifying its offerings beyond classic motorcycles. Remember, the 450 roadster space or the 400cc motorcycle space is actually very crowded, with Bajaj offering KTMs, Dominas, Pulsars. They're offering some TVS, Hero, everybody. So essentially, every two-wheeler maker worth its salt has products in this category, which is dropping in a very crowded space. What analysts are saying that Guerrilla 450 will not add to the numbers, so to speak, so there will be no revival of growth on the back of Guerrilla 450. That's because it's in a higher price band. City says there is a good upgrade from the Classic 350. MK says it sees sales at about 2,000, 3,000 units per month, as against the about 10,000 units that Bajaj does on a monthly basis in this particular segments. So all in all, when we rode the Himalayan 450, the engine deserves, the engine which also powers this motorcycle deserves the roadster format, a city-going format. But the verdict is still out on how the vehicle rides and how the sales will perform. For that, we'll have to wait till August. No problem.
All right, absolutely. Thank you very much, Tushar, for breaking that down for us. Well, the Future Group's Vivek Bayani has announced the launch of a new experiential store, Broadway. The platform will showcase a large variety of brands alongside infotaining content and events. Listen in to know more about the new theatre-style retail store.
The average size that we want each store potentially will be anywhere between 30 to 40,000 square feet, maybe some little larger. And I think the categories that we do are beauty, personal care, health and wellness, fashion, lifestyle, accessories, footwear, so on and so forth.
And as per reports, you are opening in 3 cities as of now, which are Delhi, Mumbai and Hyderabad. So what are the other geographies that you're looking at going forward?
So I think our plan for this financial year is to open these 3 cities. We are opening Delhi around end August, followed by Hyderabad in September. And Mumbai would open about March of 2025. As of now, we have these 3 cities. I think we're obviously kind of looking out to additional spaces that we can go out to, but we'll plan that right now.
All right, it's time for us to slip into a very short break. On the other side, we bring you national news and we discuss more about the ongoing Bangladesh protest. Stay with us.
driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
एक ही लक्ष्य नेशन फर्स्ट, एक ही इरादा 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. Welcome back, and here's a look at what's happened in the NEET UG row. Now, the Supreme Court has ordered the National Testing Agency to release marks city and centre-wise. Varun Gakar is now joining us and has more details. Varun, that was quite a long hearing that we saw in the Supreme Court today. Break down for us what happened.
Yeah, hi, thank you. So yeah, firstly, the top court told the petitioners that they need to show to the court that the leak was so systemic that it has affected the exam across the country in such a way that the exam has to be cancelled. It said that if we do not agree to the re-exam, then we would like to know what further investigation is needed to find out what happened in this entire fiasco. Now, the CJI made it clear that a re-examination cannot be ordered merely because lakhs of students want a re-examination or haven't gotten admission through the NEET UG 2024 exam. He said that a re-test can only happen if the sanctity of the entire exam has been affected. Further, the petitioner stated that the NTA, in tandem with the IIT Madras, has prepared a data analytical report of the entire 23 lakh student who sat in the exam and has demonstrated a bell curve pertaining to the distribution of marks. This, the NTA has said, that shows that there was no abnormality in the distribution of marks in the exam. However, the petitioners have stated that it is impossible to detect an abnormality through this data analysis, as the data is too large and any granular variation cannot be detected through this data. Citing the IIT Madras data analytics report, which says that an overall increase in the marks was attributed to a 25% reduction in the syllabus of the exam, the petitioners argued that this is not painting the true picture, as the petitioners have placed on record that there was in fact an increase in the syllabus in some portions of the examinations. Now, disputing the fact of the malpractices in the exam, the NTA has placed on record that the first 100 candidates, or the top 100 candidates, are across 95 centres in 56 states and 18 states. 56 cities and 18 states, which shows that there was a wide variation in the distribution of marks. And if there would have been a leak, then there would have been a spike only from particular centres. The petitioners told the Supreme Court that the question paper was circulated on a Telegram channel one day prior to the examination, and given the nature of social media, it is impossible to accurately determine the precise quantum of the leak. On this, the court observed that whoever has leaked the paper would have done it for money, and therefore why would that person circulate the question paper on a mass scale? Now lastly, the NTA informed the top court that there was no leak but a breach, and that too only in a particular center in Hazaribagh. It happened early morning between 8 a.m. and 9:30 a.m. on May 5. And in addition to that, the counsel for NTA said that the students got only 2 hours to memorize the solved questions. And that's why out of the 18 students that are under investigation by the CBI, only one would have possibly gotten admission, but he too now will face debarment in this exam.
All right.
Lastly, the court has observed that it now seems that the breach was a localized event at Hazaribagh and Patna, and questioned whether an entire exam can be cancelled on the basis of this fact alone.
All right. So, Varun, what we understand is that the court will now be hearing its final hearing on the 22nd of July. Thank you for the moment for joining us. Now, Pooja Khedkar is still in hot water, and her family is too. Now, the police have detained her mother, Manorama Khedkar, for allegedly threatening some people with a gun over a land dispute. Reports of her father, Dilip Khedkar, have also surfaced. He was allegedly suspended twice during his tenure over demanding bribes. The probationary IAS officer's training has been put on hold, and allegations of misuse of power and privileges have been laid out against her. And heavy rains continue to flood the hilly areas of Kerala's northern districts. In Wayanad, 29 houses have been damaged and over 700 people have been relocated to camps. Uprooted trees and minor landslides have also been reported. The IMD has issued a red alert for Wayanad and Kannur districts in Kerala. Although the flood situation in Assam has improved with water receding from several parts, over 3.5 lakh people in 11 districts are still affected. Presently, major rivers, including the Brahmaputra, are flowing above the danger mark. In western Karnataka, heavy rains led to increase in inflow into the rivers. In the Krishna Basin, water flowed into 4 reservoirs, including Hippargiri, Alamati, Narayanpur and Tungabhadra. And in a tragic turn of events, the Chandigarh-Dibrugarh Express has derailed near Pekora, located between Gonda and Jhilahi. A rescue team from Gonda has been dispatched to the site to assist with emergency operations and the passengers involving the accident. Reports indicate that 4 AC coaches were among those affected by the derailment. As per the Relief Commissioner, 2 people have been reported dead and around 20 have been injured in the accident. Now, owing to the ongoing nationwide protests in Bangladesh, the Indian High Commission in Dhaka has advised its citizens to avoid travelling and minimize their movement outside their living premises. The protest began on the 5th of June when the Bangladesh High Court reinstated 30% quota for descendants of freedom fighters from the 1971 Liberation War. The protests have already killed 6 people across the country. The violence has prompted government to shut down all public and private schools and universities across the country for an indefinite period. Well, as part of the Samarth by Hyundai initiative in partnership with NDTV, we bring to you stories of people who prove that disabilities do not define what they can or cannot do. Paracyclist Geeta S. Rao, who was affected by polio at a very young age, is one such story. Take a look.
When I was just 3, a doctor told my parents I may never be able to walk again. I tried to learn bicycle I gifted to my nephew. Within 2 days I handled how to bicycle. I learned that and went for a small ride with my sister. Within 200 meters I fell down, got dizzy. That was the point where I decided that once in my lifetime, I will be doing 200 kilometers at a go. And from there, my cycling journey started.
Geeta S. Rao beating the odds.
I did paragliding, India's highest bungee jumping, sea swimming, fire walks, walking marathons, ultra cycling, sky cycling, mountain biking, and whatnot. My body might be limited, but my firm spirit keeps on cycling miles.
I'm Shamar.
Well, on that note, it's a goodbye from us on Profit 360, but we'll be back with more news, so stay with us.
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back, it will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
एक ही लक्ष्य नेशन फर्स्ट, एक ही इरादा 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Good morning and welcome. This is NDTV Profit. You're watching Ask Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Now, this show is geared towards getting you answers to all of your stock-related questions, whether they're short-term technical-based questions or long-term portfolio fundamental-based questions. You can send all of them to us on that number that you see at the bottom of your screen, and we will take it up over the...
Being here with us today. We started the financial year with a strong performance in Q1 across multiple dimensions, including broad-based revenue growth, expansion in operating margin, strong large deal wins, and strong cash generation. Our revenues for the quarter grew 3.6% sequentially and 2.5% year-on-year in constant currency terms. I'm particularly pleased with 7.9% growth in the financial services segment, where we are seeing improvement in client spend in North America. All geographies and most industry groups grew sequentially. Volume growth turned positive after several quarters. We had another strong quarter of large deal wins with 34 large deals at a total contract value of $4.1 billion. Our clients see us as a preferred partner of choice in consolidation, cost takeout, and efficiency opportunities. This is also a reflection of our leadership strength. With the mobilization of our margin program, we see positive impact on operating metrics. This resulted in our margin expanding by 1 point sequentially. Free cash flow was highest ever at $1.1 billion. We continue to see strong traction from our clients for generative AI programs delivered through Topaz. Enterprises are focused on their own data sets that can be used
in generative AI large language models that create huge impact for them. Along with our overall robust performance in Q1 and strong opportunity pipeline, we are seeing early signs of improvement in financial services vertical in the US. While discretionary spends continue to be under pressure, our highly differentiated offerings around driving efficiencies at scale and the transformation capabilities around generative AI have positioned us well in this market. With respect to our recent acquisition of Intech, we have received the required approvals and have closed the acquisition transaction. Given our strong performance in Q1 and our current outlook, we have revised our revenue growth guidance for the full financial year to 3% to 4% growth in constant currency terms. Our operating margin guidance for the financial year remains at 20% to 22%. With that, let's go ahead with the questions. Thank you.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sangarajka, Chief Financial Officer, Infosys. With that, the first question is from Ritu Singh from CNBC TV18.
Hi, here, Ritu from CNBC. Thank you for the question. A huge upgrade in the constant currency revenue guidance, 3 to 4%. So firstly, while you highlighted in financial services in the US, you're seeing some signs of a pickup. Overall, what is your sense on discretionary spend coming back? Where are the verticals you continue to see weakness? And was all of this upgrade organic, or have some of your past acquisitions that you've now completed had some role to play in this upgrade that we're seeing? Also, your margins are up about 100 basis points over the previous quarter. I just wanted to understand, is there headroom for further growth when you're expecting to take the wage hikes, etc.? And just one more question, if I may, on your headcount. As we've been asking you for the past several quarters, now 6 quarters it's been coming down. What are your hiring plans for the year? If you could just throw some light on that.
So thanks for your question. Let me start with the first one. On the guidance, the way we see what's going on in the market and our guidance, first, we had a strong performance in Q1 on volumes, as well as the point that we made on financial services in the US. Second, we had a very strong performance on large deals in Q1, which gives us more visibility into this financial year. And third, we completed the Intech acquisition, which also helps us in this guidance. And Jayesh will give some color on the specifics with Intech as well. On the margins, Jayesh, for you.
Yeah, so if you look at this quarter's margins, we have already expanded our margins by 100 basis points. If you look at the put and takes of that, almost 100 basis points came from last quarter's normalization. Last quarter we had one-off, which impacted our margins. We had 80 basis points coming from Project Maximus, which is our margin expansion program, on the back of better pricing, which is value-based selling, better benefits from our efficiency pyramid, which is utilization, etc. And 40 basis points came from one-off benefit that we got in this quarter from one of the clients on revenue side. So those were the positives. On the headwinds, we had 1.2% coming from better variable pay and higher leave and other costs, resulting in almost 1% margin expansion for the quarter. The Project Maximus, as you know, has been, we are working on it for the last couple of quarters, and it has started showing results. Our long-term, medium-term objective on that is to expand margins from where we are. This year's guidance continues to remain 20 to 22%. Coming back to your last question on the headcount, as you know, last multiple quarters, we have moved to the agile hiring base. That basically means we hire freshers both from the campus, off the campus. This quarter, we had a 2,000% net decline, which is lower than the previous quarters. Our utilization is already at 85%, so we have little headroom now left. So, as we start seeing growth, we will look at hiring. We are looking at hiring 15 to 20,000 freshers this year, depending on how we see the growth.
Sorry, Salil, just to follow up on the first question. When you say the Intech acquisition also played a role in you upping your guidance, could you give us a clear breakup how much of it is coming organically and how much inorganically?
Sure.
So if you look at, we don't break up guidance, first of all, between acquisition and non-acquisition, but if you look at the disclosure that we made when we acquired Intech, the annual revenue of Intech was around 170 million euros, right? So you can, in a way, back calculate, but we don't really break up how much of guidance is between, organic and inorganic.
Thanks, Ritu. The next question is from Haripriya Sureban from NDTV Profit.
Sir, could you give us a broader sense on the demand environment when it comes to other regions than Americas? And what is happening on the pricing bit? What has changed since the last quarter? What gives you the confidence in terms of like upping the guidance?
So on the, I'll go the first point on the demand environment. In other regions, so what we see, which we've continued to see, good growth. First, sequential growth was good across all the geographies, but we see good demand in this sort of an environment in the European market where we've had good traction, and we've also had some of our large deals ramping up in that environment. Equally, in what we see in the US or the North American market as well. So both of those we're seeing good traction on. Jay should also give a little bit more color on industry later. And the second point, go ahead, Jay.
Sorry, what was the second point?
The second point on the pricing.
So pricing environment has pretty much remained stable. But if you look at, again, one of the pillars of Maximus is value-based selling, where we've been able to make an impact, which has helped us, improve our overall pricing. But overall environment has continued to remain stable. Coming to the sectors that Salil wanted me to talk about, if you look at financial services, as Salil mentioned earlier, the US financial services, we have started to see some recovery, especially in the cards, payments, capital markets areas. Manufacturing continues to remain strong as a sector, but our manufacturing growth we expect this year to be lower than the last year, because last year we had a very strong growth in manufacturing. Retail and EURS remains similar to our commentary earlier, and high tech continues to remain softer.
Thank you. The next question is from Veena Mani from the Times of India.
Hi, gentlemen. I have few questions. Some of your peers who had the same sort of set of numbers, with some positive growth, could give us an outline only up to the next quarter, on what things look like. What do you think the next few quarters of this financial year would be? Would you be able to give us, tell us a little bit more about the, how the macro environment is going to be like and the deal environment is going to be like? Secondly, I wanted to ask you about how your internal fulfillment goes. IJP is a huge thing at Infosys. So would that be a focus going on? Or would you again go back to the market and hire extensively, not just freshers, but even laterals? And the other thing is about Mekamish. So you've called out in your annual reports that the cybersecurity is not as adequate as you would want it to be. So are you going to expand that coverage? What is it like you're going to be doing on the cybersecurity front? And with the Mekamish incident, does it make it even more pertinent for you to add to your cybersecurity measures? These are three.
So let me start with the first one on the macro. On the macro, I think the sense we have is the discretionary spend, which is a function of macro as it impacts our clients, is still the same as what we were seeing in the past quarter, with the exception that we saw a little bit better outcome for financial services in the US. But otherwise, it's the same. So it's a discretionary is still low from where it was several quarters ago. Now, to see beyond, so the way we do this, like at this time in the start of Q2, we'll have an outlook of what we can see into the environment over the next few months. We don't have a view which is, let's say, what will happen at the end of the financial year and so on. So that's how we are seeing it today. But as we see, as we've done now, as we see any changes like what we saw in financial services, we then at the end of the quarter come back and update things on that. On the second point on IJP or the fulfillment, I think the view is we've always look at fulfillment from what we have. As Jay shared, our utilization is looking at a fairly good level. We will still have fulfillment internally, but we will also potentially, as we see the demand, have recruitment both on campus and at other levels as well. On McCamish, I think we issued a statement on April 18, 2024. In addition to that, we've completed the e-discovery process has been completed, and McCamish is in the process of coordinating with its clients to ensure all the notifications are provided. In addition, the US state attorney generals and insurance commissioners have also been notified. That's what we can share with respect to McCamish.
Thank you, Veena. The next question is from Money Control, Chandra.
Hi, Salil. Hi, Jayesh. Salil, in terms of business segments, with the exception of financial services, which has seen an uptake, all the other verticals are more or less, flat sequentially. I think retail has declined by some basis points. So give us a sense of what you're seeing there. You've already spoken about how financial services is looking up. And in terms of geography, also, North America has declined sequentially. Europe is flat, rest of the world is flat, but India has seen an uptick. So what's driving the growth for you? Is there a specific project that's helping you? Also, last month, I think during your AGM, Nandan Nilekani mentioned that you have 225 Gen AI POCs, right? Projects. So if you can give us a sense of your pipeline, are you going to be, giving us a sense of what the size is? Because TCS has called out 1.5 billion. I think Accenture has called out 2 billion. Will you be quantifying that? Jayesh, for you, I think utilization has helped. Excluding trainees, it's gone up by 2 percentage points. You've also increased offshoring by, I think, a few basis points, which has helped your margins. So, will you be utilizing these levers? I mean, can you sweat these levers more in the next quarter to keep up margins? Salil, finally, do you have a view on the reservation bill that Karnataka mooted and now it's paused, but is one of the biggest companies operating in Karnataka? What's your view on reserving jobs for locals? Thank you.
So on there are a few questions. Let me start first with generative AI. Jayesh will talk a little bit about the industries and the geographies. On generative AI, we are making huge impact, and as Nandan shared at the AGM, the sort of work we're doing is massive. We are not at this stage disclosing and quantifying externally our revenue from it. The work we are doing is quite incredible. The focus is really on what enterprises are doing for generative AI. And what are enterprises doing? They're working on their own data sets within the confine of the enterprise and making sure that the benefit of that comes through for them. For example, there's work that's massively going on in customer service. There's work that's going on in software development. There's work that's going on across process optimization, in knowledge. So there are a variety of areas in which generative AI work that we are doing for clients is making a huge impact. And there are several examples, some of which we also shared in our annual report, some of which without client names, where we're working on for projects for generative AI. Let me also let Jayesh talk about the industry, and then we can go to the other ones.
Yeah, so I think, Chitra, the numbers that you're looking at are year-on-year numbers. If you look at the sequential numbers, financial services have grown 7.9%, manufacturing has grown 3.6%. Almost all segments have grown, and all the geographies have grown this quarter. So that's what Salil was referring to, in terms of broad-based growth this quarter sequentially. Coming to your other question on margins, while utilization has pretty much reached the peak level in our mind, there are other levers, value-based selling, more offshoring, nearshoring, all of those are still levers that we have that we will look at in terms of expanding margins from where we are.
The geography split, Jayesh.
The fact sheet.
India?
You're referring to the fact sheet?
Yeah.
The fact sheet is year-on-year numbers.
Okay.
They're the year-on-year numbers.
I think the question was on reservation, the last question.
The question, first, we are planning to work with all the regulations that the state and central governments will work on. We support whatever regulations and guidelines that will come. We'll wait and see what they look like as time develops. But our approach in general is to make sure we are aligned to the new laws and regulations that come out.
Thank you, Chandra. The next question is from Beena Parmar and Samir Bakshi from the Economic Times.
Hi. First, we want to know the guidance that you've revised. How much would be inorganic growth from that? And your India growth has also seen a large jump. Could you give us some clarity on color on, where does it come from? Is it from one large deal, or do you see this going forward? Do you see this expanding? And in terms of fresher hiring, you mentioned that you would be going to campuses and also looking at it laterally. How much would be campus recruitments from the number that you shared? And have the onboarding process of previous offers been done already?
So on the guidance, what we are seeing today, we had a very strong Q1. With that performance, which focused on specifically volumes on financial services in the US, that gave us more confidence for the year. Then we saw the large deals in Q1 itself. That gave us more visibility for what we're seeing for the full year. And then we had the acquisition with respect to Intech. Those combined give us the support to increase our revenue growth guidance. As Jayesh said, we don't split out the guidance between organic and inorganic. However, the revenue number for Intech is something that we have shared. Jayesh just shared that. And so from that basis, you can add, it's a part of it. There's a vast majority of it is coming from what we see in the volume, financial services, and large deals. In terms of recruitment, as Jayesh just shared, we will be going to campus. Between the way we do campus, which is campus hires ongoing and at campus, and that's in the range of 15 to 20,000 for this financial year.
Is there a breakup on how much would be from campuses and otherwise?
We generally don't. Sorry, go ahead. We generally don't break up that. It's a combination of from the campus and off campus. As we see the demand environment growing, we will look at which is the best source of.
And has the onboarding of previous offers been done completely, or is it still pending?
A small portion of that would be pending. The rest is pretty much done.
And Salil, on the India growth, can you give us some color?
Yeah,
where
the India growth. So there, first, India is a small part of our business. So each quarter, with different events, it can go up and down. In general, India business is doing well for us in terms of growth. In this specific quarter, as Jay shared earlier, there was also one-off with respect to the India business. But in general, it's in good shape. It's a small number, and sometimes there's more movement because of small numbers.
One more, if I can add, from your existing deals, what kind of percentage would be Gen AI projects, if at all, at least a ballpark number?
So in generative AI, we are not sharing externally the value in terms of revenue or of the deals. What we are very clear about is, if you look at industry ratings, if you look at what others are saying about Infosys and our generative AI approach, it's leading in the market. We are also very careful. We are not combining generative AI revenue with AI revenue. AI has been going on for a while, and really today there's much more interest with clients on what generative AI can derive, and that's our focus. That's where we believe we have leadership, and that's where there's a huge distinction between what large companies or enterprises are doing and what consumers are doing on generative AI. And our focus is very much with the enterprise generative AI.
Thank you, Beena. The next question is from Padmini Dhruvaraj from the Financial Express.
Hi. You said that you finished acquisition of your ER&D company. So from when do you see it contributing to your revenues? And how many POCs of your AI use cases are in production now? And so this demand you said of BFS space in North America, is it also because the clients want to adopt to new technologies? And is bundling AI services in your regular deals, or are AI deals becoming separate from your transformation deals?
Okay, so we'll go one by one. I think the first one was on what we are seeing with generative AI. Oh, sorry, ER&D. So the acquisition is complete. I think that was the question. Or? From when do you see it contribute? Oh, when? It's complete yesterday. Yeah, so it'll start from this quarter. And in fact, engineering services is one of those areas which is growing well for us. We are seeing a lot of traction in the automotive space, in the medical devices space, broadly across all elements of engineering services. And we've had now two acquisitions that we've done on that. Then the second one was the demand in FS, if that also includes, is it because of AI or not? So there, what we are seeing with the demand in FS, which we are seeing improvement in, is across all of our capability. It's not only from AI or generative AI, it's also for cost and efficiency, consolidation plays. It's also sometimes very specialized, like in the payments and cards areas where we have some specialized capabilities. We see demand for those sort of activities, but it also includes AI in it. On the percentage of projects which have gone from POC to production, we don't share that externally. But what we did say and we continue to see is we are seeing a lot more work which is production projects. We are not seeing just POC work, it's real work in production with clients. For example, we're doing some work on credit risk analysis. Now, this is a project which is in production with a bank where with generative AI and AI, we are able to improve the quality of the decision making or help them improve the quality of decision making, and also the time, make it better. So this is a huge real impact that the client is seeing in this area.
Thank you. The next question is from Haripriya Suresh from Reuters.
Hi, good evening. I think most questions have been asked, but for the last few quarters, we've been talking about the delay in TCV to revenue conversion. Does that timeline getting better, or do you still, is there still as much caution? And are you seeing any sort of transformation deals, or are you mainly in the cost efficiency and vendor consolidation deals kind of a thing? Also, your wage hike cycle last year, I know, was delayed. Are you coming back to the old cycle? Has the cycle been delayed? What is that environment like? Also in BFS, I know you called out growth areas as cards payments, but are you still seeing any softness that you would want to call out? But yeah, thank you.
On the deals and the conversion, there was, I think 2 or 3 quarters ago, we had spoken about some specific deals which it was a slower start than anticipated. Today, we are seeing our large deals converting in as per expectation. So we had already reset that expectation, and it's as per that expectation. There's no further slowing, and there's no other change in that. The type of deals we are mainly seeing that cost efficiency consolidation deals. There's still not the appetite to spend big on a transformation, technology transformation type of program. On the wage hike and the other one.
So on the wage hike, as you would recall, we've done our last wage hike in November last year. At this point in time, and every time we do a wage hike, we take multiple factors into account, right from what is the inflation, when the last time we did the wage hike, what's the peer practice, etc. And at this point in time, we are evaluating all of that. But at the same time, as I called out in my margin walk, we have improved our variable pay this year versus the last quarter and last year.
Thank you.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back, it will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow.
Welcome to Budget Countdown. In a few days from now, the Finance Minister will announce the much anticipated Union Budget. This will be the first budget of the new government and Nirmala Sitharaman's 7th consecutive. This budget, of course, is more important in more ways than one. The government goes into this budget with a very comfortable fiscal position. Approximately with over 1 lakh crore rupees cushion is available to the government on back of the RBI bonanza and better than expected tax collections. We have with us a very esteemed panel joining in to talk about what the industry expects, what India Inc. needs to do, and of course talk about the journey and the building blocks to Viksit Bharat. We have with us Anisha, President FICCI, Harsha Vardhan Agarwal, Senior Vice President FICCI, and Subrakanta Panda, Immediate Past President FICCI. Thank you, gentlemen, for joining us today on the show. Anisha, I'll start with you first. And as the President of FICCI, let's talk about the mood before we go into this budget. How optimistic, how buoyant, and how confident is India Inc. feeling about growth, about demand, about generally business?
Samina, good afternoon. Pleasure to be here with you. Overall, I'd say the mood is balanced, tending towards optimistic. There are some industries which are clearly very buoyant right now. Real estate's a classic example there. There are some that are moving along quite well. You see tourism actually probably a little more on the buoyant side as well. The auto industry has been moving quite well, seen some signs of slowness, but really not very significant. And overall, therefore, we feel that while consumption is lower than what it has been last year, the economy is still in very good shape.
Oh, optimistic. It's good to hear that. I believe you're echoing the sentiment of the industry, not just of M&M. But Harsha, I'll come to you next. I mean, we've talked extensively about Viksit Bharat and the road and the journey to that. In your opinion, what are expectations? We saw what happened at the interim budget where things were left at that. It was a short 56-minute speech trying to say enough and leaving you wanting more. As we go into this budget, what are your expectations?
So I think we want, investment which leads to inclusive growth. I think that is what will overall propel the growth in the economy. And when we say inclusive growth, the employment should grow. At the same time, how does the government improve the skills? That is where we need to see government intervening. They have done a lot of things. Initiatives has been announced. Those are again something which we need to take forward.
You're right. Skills, employment, bringing it up to the curve. I mean, I believe a lot has changed pre-pandemic and the world we live in today. But I'll come to Subrakanta as well. Mr. Panda, I mean, what are your expectations? Let's start with that. Highlight the top 3 key initiatives you believe the government should be undertaking, and start with what it is in terms of this budget.
Samina, first of all, thank you for having us on the show. Now, in terms of the top 2 or 3 recommendations that FICCI has had, I think it's to continue with the good work which we have seen over the last few budgets. And I think topmost on that list is government spending on infrastructure, which of course the interim budget had an announcement which took it up to 11.11 trillion rupees. And that is something that has worked out very well during the pandemic and its immediate aftermath. And while everyone agrees that private sector's spending needs to increase, and indeed it is beginning to, but I think the focus of government infrastructure spending on various things is a very productive and good way to go about it. The second thing I would say is that we are certainly looking for measures which will continue to improve the ease of doing business and reduce the cost of doing business. And that is particularly important from a manufacturing sector point of view, which really needs to do well in order to complement what the services sector is doing in terms of creating jobs. And the third thing I would look at is some simplification in the tax regime, whether it is in terms of the TDS or TCS rates. From our point of view, we have suggested measures which would lead towards greater simplification and thereby do away with classification disputes, etc. And where litigation has already been initiated, what is the best way forward in terms of bringing that litigation to an end, so that industry can focus on doing what it does best, which is contribute to the nation's growth.
You're absolutely right, and I believe everyone would resonate with that. Ananta Goenka as well joins in. Ananta, how do you feel ahead of the budget? What is your mood? Are you excited? Are you optimistic? What is demand? What is growth looking like right now, just ahead of the budget?
Right. No, I'm fairly optimistic about the economic situation right now. The good thing about the government now coming in is a sign of continuity. Even with the cabinet postings that we've seen, it is a sign of continuity. In the last few years, we have seen a very long-term vision that has been set out by the finance minister and continuously acting on that year on year. This year being the first year of the new government, in a way, we hope to see again another 5-year vision from the government and a continuity of the past that has been happening. The few actions that certainly, as my colleagues shared, continued investment in infrastructure, boosting manufacturing, looking at employment as an important area of job creation, and finally, how do we boost demand to make sure that private investment increases. We've been resting a lot on the public investment part. We need to boost private investment going forward.
Oh, I think that is unanimous sentiment across the board, Anand. But Anish, I'll come back to you on consumption. We saw how Bharat voted a few months ago. Rural consumption has been a sour point in the country now for quite some time. Some may even go to the extent of calling it rural distress. What do you think needs to be done to boost rural consumption? Because from what I understand, most people who've gone back to villages are even refusing to come back to work, it seems.
So consumption has been slightly lower, 6.8% in fiscal 23, down to 4% in fiscal 24. But on balance, Savina, it's really not that bad. And while, yes, there have been signs of rural distress, if we look at it over the past 4 years, rural actually is held up very well. If we look at tractor sales as a proxy, the tractor industry grew 27% in the first year after COVID, and grew 9% in the year after that, and then had a slight decline in the following year, followed by a flattish year that we expect this year. So on balance, if you look at a 4-year period, the cumulative growth is really not that bad. So yes, we've seen some vast increases and we've seen some softness around it, but it's not something that concerns us. There may be some measures that are required, but we still feel from an industry standpoint that the key focus has to be on long-term growth, on long-term capital formation, on investment, on infrastructure, on making India the manufacturing hub of the world by reducing cost of manufacturing.